Hello everyone, welcome back to upGrowth. A lending business is spending 5 lakhs a month on ads across Google, Facebook, and LinkedIn. How many loan disbursements is that actually producing? Which channel is working hardest? And what is the 12-month return on that spend? This simulator answers all three questions in one place. This is a lending marketing ROI simulator by upGrowth. It is built specifically for lending businesses, NBFCs, digital lending platforms, and banks running performance marketing in India. You have to just enter your ad spend, loan value, conversion rate, and channel mix, and you get a full 12-month projection covering disbursement, margin, income, accumulative revenue versus cost cohort, a monthly conversion funnel, and a channel return on investment ranking. So let's quickly check with an example. There are 8 inputs. Let us go through each one. First one is monthly ad spend. Is your total marketing budget each month across all paid channels. And average loan disbursement value is the typical loan amount your business disperses per approved applicant. And current CAC is your customer acquisition cost, how much you spend in marketing for every customer who actually receives a loan. And lead to disbursement rate is the percentage of marketing leads that make it all the way through to a completed loan disbursement. This accounts for drop off at credit check, documentation, and approval stages. And primary channel mix is how your budget is dispersed across these platforms like Google, FB, LinkedIn, etc. We have a drop down here, select the relevant ones. And geography is your primary market. I've selected India here. And expected monthly dispersals is your target number of loan disbursements per month. And the last input, average margin per disbursement, is a net margin your business earns on each loan, the percentage of the disbursed amount that stays as gross profit across cost of funds. So I've entered 3.5% there. Now let's hit on calculate ROI. So here is what the output shows. The 12-month ROI is 58%, meaning for every 5 lakh you spend monthly, the cumulative return over 12 months is positive and growing. And 12-month disbursement is 90. The total number of loans your marketing spend is projected to close over the year. And annual margin income is 94 lakh 50,000. That is the total gross profit from your lending margin across all disbursements over 12 months. And here we have also have the LTV is to CAC ratio. Also we have a channel strategy here. Here it says your lending marketing strategy is optimized for diversified channel acquisition. This approach reduces risk and maximizes scale potential across geographies. And also we have the revenue, cumulative revenue versus cumulative cost chart, shows both lines from month 0 to month 12. The revenue line climbs to around 90 lakh by month 12, while the cost line reaches around 60 lakh. The gap between them is your cumulative margin over the year. And the conversion funnel breaks down your monthly pipeline. Rupees 5 lakh in ad spend generates 63 leads at a 12% lead to distribution rate, that produces 8 actual disbursement per month. At rupees 3 lakh per loan and 3.5% margin, your monthly revenue from margin is rupees 7 lakh 87,500. And the channel ROI ranking shows how each channel is in your balanced mix performs by efficiency score. Performance marketing, meaning Google search and display, ranks first at 35% efficiency. Social, which is Facebook and Instagram, comes in second at 30%, and LinkedIn ranks third at 20%, and other channels make up the remaining 15%. So, lending businesses often look at lead volume and approval rate, but rarely connect those numbers back to the original ad spend in one model. This simulator closes that gap. It shows you that rupees 5 lakh a month on a balanced channel mix produces 8 disbursement a month at a 12% lead to dispersal rate, and that rupees 94 lakh in annual margin income is the final financial return on that investment. It also tells you which channel is working hardest SEO. You can decide whether to shift budget toward performance or scale social. For a lending business planning its next quarter, these three inputs, ROI, disbursement, and channel ranking, are exactly what you need before making a budget decision. So run this with your own CAC and lead to disbursement rate before your next performance review. The link is in the description. And if you want upgrowth to help you build a fintech performance marketing strategy for your lending business, book a free strategy call with this button here right below. We can help you out. Thank you.